Thanks for tuning in to this live recording of the Resilient Advisor Show. We've revamped the show to take it back to our roots, where we're going to bring you the best practices and the top thought leaders that serve financial advisors. This live recording with Tyrone Ross. During it, if you have questions, you can pose it on Twitter, LinkedIn, Facebook, or YouTube, and I'll be able to share that question with our guest. Let's roll.
This is the Resilient Advisor Show with Jay Coulter.
Thanks for tuning in to this episode of the Resilient Advisor. My guest is Tyrone Ross of Turnkey Labs. Tyrone and I first met about 3 years ago when I started to question if I should do a deeper dive into Bitcoin and cryptocurrencies. I went out and sought out thought leaders who could come on the show and share their knowledge, and I was a real skeptic at the time. And then I noticed some of the best minds in our business drifting over, leaving careers in financial services and getting into the blockchain space. Since then, we have done multiple shows on blockchain, on Financial Advisor TV. We have a whole crypto channel. But today, Tyrone agreed to come on because there's a little bit of duress in the markets right now, Tyrone. So I appreciate you coming on during all this volatility so we can help advisors better understand how to work with their clients.
Yeah, just a bit. Still a bit of volatility. Par for the course.
A little bit of volatility, which is I want to get into. But first, you've had some career changes. You've started a new company, Turnkey Labs. Could you tell us a little bit about your new venture?
Yeah, absolutely. Excited to put the teaser out and finally get this out. Been working on it for the last 2 months or so behind the scenes. So Turnkey is going to be an API suite. Think of it as the tagline for the company: integrator, aggregator, marketplace, to essentially be that true plat of crypto for RIAs initially, but the entire financial services space, which had been tried. But I think with the team that I've assembled, my two co-founders who are brilliant, more to come on that. I think we'll be able to do it with the precision that the space needs. So the goal is to grab all of that data, clean it, standardize it, and then pipe it into the workflows of advisors. Because if I've learned anything over the last 3 months of just touring around and, speaking to a lot of different RIAs and just folks in general, I think this is more a data story right now than a portfolio allocation story. And personally, of wanting to make sure that advisors get access, right? It was building to that. And I still believe that is the way. I realized how early it still is. There's a long way to go, but data always wins, right? And data will be a good way to provide insights, planning, tax planning, financial planning, estate planning, so forth. So we're excited about what's to come with Turnkey.
The estate planning itself, we could go do a whole series on the challenges advisors are going to have with that, right?
Yeah,
all right.
Absolutely.
So when you do officially launch, you get rolling. I hope you come on and share with the advisor community everything that you're going to make available. But right now, let's talk about the markets today and what advisors need to be thinking about. And I want to start with a clip. So you've been coming on this show for about a little over 2 years now, and I'm going to play a clip from our first episode. And to set the context for this, I had reached out to Tyrone and I said, I'm a skeptic. I don't believe in this stuff, but I'm seeing it everywhere. I'd like to educate the community. Would you come on and share your thoughts on the space? Don't laugh at the clip when you see it.
So I don't care whether you are a crypto skeptic like yourself or crypto hectic like myself. As a fiduciary, you have a responsibility to be knowledgeable on things that your clients ask about, or if not, to be able to go seek that knowledge or have a COI or center of influence to get knowledgeable so that you can advise that client again to make the best decision for them, putting their interest first, right? Not your love of crypto, of your disdain of crypto, ahead of that client asking questions.
A little bit of feedback there. But the point is, it's about education as an advisor before you get started. And as a point of record, Tyrone, Bitcoin was trading at 8,000 when we recorded that.
Wow. Did you buy?
I did. Thank you.
Nice shirt too. I love that shirt. That's a good shirt. I think that still remains. I was just up at the New England FPA, right, talking to their wonderful chapter up there. And I was saying the same thing I say to every chapter that I talk to, right? Best interest of the client right? It's the client's best interest, not yours, right? Well, it's volatile. Well, is it too volatile for you, or is it too volatile for a client? Now that may mean, okay, here I allocate 2% of a client's portfolio to this across my entire book of business. And now, yeah, it's 2%, but it's 200% of the headaches because now it's down 80%. I definitely understand that part of it. But I think there is a need here for advisors to simply take a step back and say, all right, this isn't going away. 90 million accounts at Coinbase, 50 million accounts at Cash App, of which at Cash App, which 10 million trade Bitcoin, 22 million at Robinhood, right? There's a millions and millions of accounts out there. Your clients are doing this, right? So bring it into the conversation, and the 3 L's that I say: listen, learn, and lead. If you do that, I think, one, you won't get fired, and two, you'll add a lot of value and you'll grow, because folks will know no matter what, you'll put your own biases aside, but truly give them the best interest of advice, which helps them achieve their goals.
You'd mentioned Coinbase. So they've been in the news today, some concerns about folks potentially not being able to access their accounts or get in. What do advisors need to know or be thinking about when their clients call and ask them about their Coinbase accounts?
Well, I think there are a subset of advisors that I know have been telling clients to go to Coinbase. Just go do it at Coinbase. Go open an account at Coinbase. That was never prudent. But now I think the client is going to come back with a lot of different questions. In general, I think advisors should be aware of a couple things here. One is, when you look at what is happening, forget the stock price and all those other things. One of the things that myself and others have been talking about with having clients that have assets there, it's very important to know what they own and how much and how are they securing it, right? There is Coinbase Wallet. So do they have it in a Coinbase Wallet, which is a separate offering that Coinbase has off the exchange? If it is there, right, there was a big hubbub in the news about basically saying if clients' assets that were held at Coinbase in the event of a liquidation, right, are going to help satisfy those that are the creditors of Coinbase. So all of these things are important for advisors to know. But most important now, they're laying off staff. They never had a number for you to call and say, hey, my client's crypto is missing, right? So all of these things, still trying to get up to speed with, are we going to get 1099s from them, tracking cost basis? There's a lot left to be desired there for advisors working with Coinbase and their clients just doing this away from them, right? The other thing to pay attention to, the CFO of Coinbase, when she was on CNBC, was saying what they're seeing is money come in, client transacts, money leaves, money comes back. As an advisor, all I hear is taxable event, taxable event, taxable event, right? Like, what is going on? So the ability to see all that and track it and understand what the client is doing is going to be really important. So I think, back to what I was saying before, so long as advisors have an open window into what the client is doing away, right? And if advisors have an understanding of, and clients have an understanding, I can come to my advisor and talk about this no matter what I'm doing. Now you grow that relationship, and it's just a part of the everyday client conversation. But advisors very much need to understand, again, with 90 million accounts there, your client probably has an account at Coinbase. You should be aware of that and everything that is going on with them and around them.
Mm-hmm. Yep. So we had an opportunity to meet in person for the first time here, post lockdowns out in San Diego back in March. And I sat in your presentation, and here's what was unique about that. It was not a canned PowerPoint driven presentation around what advisors need to think about in terms of adding crypto to their practice. You walked through an example of client interactions when they're talking about crypto and the potential liabilities there. And I thought it was a fantastic deliverable, because I imagine most of the advisors in the room had not even thought through a lot of those issues. So for advisors today, especially given this drawdown in crypto since then, what do they need to be thinking about in their client interactions on a granular level?
Great question. First thing is, again, I always say there's three prongs of a client conversation that advisors should consider here. The first is, again, that AUA, it's all held away from you, right? Held away, not locked away, if you will, that the client wants to have that conversation and bring the advisor into that. So with that, now the client saying, hey, I want to bring this up to you. Again, you take some notes, right? Go into CRM, right? Client has this much crypto, and you just want to glean as much as possible. Again, how much, where, how long you've been doing it, all of these things. I will silo that out by saying the core four that I talk about: your risk tolerance, investor policy statement, financial plan, estate plan. Anytime a client for the first time mentions crypto, that they own it or they want to own it, take them right back to square one. Redo their risk tolerance, right? Mr. and Mrs. Client, you were a 4. Now you're talking about crypto. We need to readjust your risk score and go back and look at the investor policy statement when we said we were going to stay in this little box. And now you're introducing a new asset with all of these different features and nuance that comes in. So redoing the investor policy statement as well, which is perfect now, because in this environment, in that investor policy statement should have been something that said, hey, this stuff is volatile. We're going to meet once a month. I know we usually meet twice, 4 times a year. Crypto's volatile. We're going to meet once a month. If in the second prong of the conversation, where the advisor is broaching the conversation, is saying, we want to allocate on your behalf, there should also be something that an investor policy statement says, we're going to rebalance more frequently, right? Because of the volatility, because of, what it shows when you rebalance more and volatile asset and what that means for returns. Also, no wash sale rule in crypto. It's a good thing to remind folks now. So advisors may be taking action on the client's behalf. Again, that should all be an investor policy statement that is separate from anything else that you're doing with the client. So I think what this has done now is forced advisors to say, okay, if I was doing this, do I have the controls in place, which the SEC wants to see anyway? If I want to do it, man, how would I handle this drawdown right now, right? So in some client conversations where you haven't done anything for a client, you just want to bring it up, see how they're feeling. What are they thinking, right? Because this is a good way to see when this happens again, how you would handle it, because it's going to happen again, right? And then I think the last part of that client conversation is client said they own it. Advisor says, okay, I want to allocate on your behalf as well. Now client says, well, I want you to do it all, right? I want to consolidate it. I want to move it to you. Now imagine that, right? You were just trying to be the cool advisor who wanted to be crypto hip. And then the client says, okay, great. And I have this, and I'm staking here, and I have this account here, and I have a BlockFi credit card. And you're like, oh my God, right? Mm-hmm. So I think those 3 buckets are really important for advisors to see where they fit. And then the umbrella over all of that is, again, making sure that your ADV, Form CRS, all your proper documentation and practice management tools are there, because one of the things that is still lacking in the space is proper reporting. Hello, Turnkey. Proper reporting and data inside of the existing platforms so advisors can model, plan, bill, report, right? Keep up the track with everything, with all, practice management, but also in the event of, an exam or anything like that. So long-winded, but I think those are all of the things that advisors should be thinking about now, that those are the prudent steps to be taken.
I like it. And I don't think it was long-winded at all. In fact, I'd like to go a little bit deeper. You talk about modeling it. So how does an advisor need to frame their crypto assets inside of their asset allocation? And it's easy to say alternatives, but then when you go and you model it in an alternatives bucket, well, there's a big difference between Dogecoin and Bitcoin. How do they do it?
So whittle it down, one, right? Like where are you actually wanting to put the capital, right? I would separate Bitcoin out of the other crypto assets, right? Very distinct and unique in its properties. The longest track record right now, obviously. And then the others, you have to have a unique understanding of them. One, not only for the SEC, because they want you to demonstrate knowledge of what you're putting clients in, but also what that's going to mean, where how do I value them, right? Based on looking at on-chain data, the community, some of the metrics that are out there, realized cap and others, right? Like I'm going to fundamentally value these. So that's one, right? So whittle it down. Okay, we're just going to do Bitcoin. Okay, great. Then, looking to size it properly, where are you taking it from? Well, let's take it from bonds because we think bonds are going to get slaughtered, but okay. Or does it come out of equities, right? Or where does it actually fit? Yeah, you may call it an alternative, like you said, but where are you taking that money from? Or is it just fresh capital? And you say, all right, we look at the client, say, Mr. and Mrs. Client, this is just a venture bet, right? We're just going to look at it as venture. And then it's just this sleeve where advisors normally tell client, like, you got a little kitty, you got $75,000 or $100,000, go do whatever you want with it, right?
Mm-hmm.
I would bring that into Mr. and Mrs. Client. Let's think of this like that. You're just not expecting much here. An allocation that is just almost like a venture bet. You're investing in a small business or a small company. Let's look at it that way. Also, where we are right now is once you are able to do that, it's highly correlated with all risk assets now, right? It's a risk on asset, it's risk off. So now that means the correlation to equities have grown immensely, especially with NASDAQ stocks. There is peak right now volatility. This drawdown looks like it's going to be the worst ever, right? So when you look at that, you have to, okay, well, now how do we size this properly for this particular client? So I think there's a lot of things for advisors to consider. And then just straight up, because again, I hate to keep bringing this up, but I always do. The SEC wants advisors, that valuation methodology. How are you pricing it? When, right? It's a 24/7, 365 market. When are you cutting off that timeline to have a price of which you then will bill on that asset, right? Price it in order to bill. Right?
Yep.
Imagine if you are an advisor and you're doing this and you build quarterly in advance, and now you have what is happening right now, right? So there's a lot to consider for advisors here. But again, long-winded answer, but a lot for advisors to consider. Just basically wanting to do a 1 or 2% allocation for a client. All of those things need to be considered before you do that.
Is it an advisor's fiduciary duty, if a client is committed to holding on to their Bitcoin, to have them take it off of a centralized exchange?
Oh, man, that is a great question. Fiduciary duty. No, it is the fiduciary duty of the advisor to know the difference and know that client, because every client may not be savvy enough to take that off the exchange and hold their own keys. Now they lose it, it's your fault, right? Sometimes you just got to go, you have it at Coinbase and you go, Mr. and Mrs. Client, all right, they can't even log into our client portal, right? And you go, all right, best house, bad neighborhood. That's great. But over time, we will teach you to secure your own keys. Knowing your client, knowing how active the client is, right? What are some of the client's financial planning and estate planning goals? Yes, you may say to that client, the fiduciary responsibility to that client and the best interest of that client may be, hey, get that off of the exchange, right? Mm-hmm. And move it here. Also, because you say, again, big data play, Mr. and Mrs. Client, pull this up. Mr. Client, you've traded 75 times at Coinbase last month, right? I'm going to print this out. You should save this when you go do your taxes. But more importantly, you should just remove the assets. You've made a lot of money there, right? Store it away. And then maybe you leave a little bit if you want to go trade your brains out at PayPal or somewhere, but let's move it off of Coinbase. So I think, again, the fiduciary responsibility and standard of care remains to know what's in the best interest of the client. And the best interest of some clients may be, nope, they should just leave it there, because trying to get them to, remember their driver's license number could be a little difficult. So good question, though. Great question.
All right. So let's talk about on exchange traded products. So when we look at products like Matt Hogan's that they have in the marketplace, we look at Amplify's block ETF. You look at some of, well, and I know you've been on Dan Weisskopf's the blockchain interviews in the past. There are some publicly traded products out there that are available to the advisor who might say, you know what, everything Tyrone's talking about, everything that I have to learn, all the risks, they're not worth it when I can go and look at some of these other exchange products. What is your response to that?
Twofold, right? I have my own personal feelings. I've never been a fan of crypto in a product. I think everyone knows that. I believe in holding the underlying. And this is, why we were trying to provide direct exposure at my previous venture, was because I just was a firm believer that if we did it correctly, advisors would be able to hold the underlying alongside all of their other traditional assets. I still believe that. But what I've also learned is, and not that I didn't notice, but the appreciation now of the easy button. It's set it and forget it. It's there. It's regulated. I can buy and be done with it. And it exists in, this particular account at this particular time. I think I can understand that. With that, though, I think advisors need to understand the fees that come along with them, right? The structure, custody, right? And all of those things that are incredibly important, because again, you're going to have to show that it was in the best interest of the client that they should have this product that costs X, but there are all these other cheaper options out there. Was this in the best interest of the client or the best interest of you, because you just wanted it to be easy?
So in fairness, we've done enough of these and you've given that same answer consistently. I just haven't had a chance to ask you that now in about a year. So I really respect the consistency on that answer. And it's a little bit of a setup question too, because there's some pretty strong opinions out there. So for those of you watching on Twitter and LinkedIn, I know that the messaging system is not working to get your questions through, but I see you guys out there watching. I apologize. Send them via DM if you have questions. So Tyrone, recently you were featured in 401k Specialist magazine. There is a lot of, in my opinion, controversy on the Fidelity decision to allow 20% out, up to 20% of allocations on crypto. And it's almost like they top tick the crypto market for this cycle. What is your opinion on crypto assets inside of 401ks?
I don't get it. I don't understand it. I mean, again, putting an asset that trades 24/7, 365 inside of any type of vehicle or product or account that would stop that, I just don't understand. Now, I get if you're looking at the investable part of it and it being, having a long-term time horizon and being to allocate, to it, having that access, I think is great. This is what crypto is all about. So I like the announcement. I love that Fidelity is pushed here. I love that you can do up to 20%, should be up to 80 in my opinion, but whatever. But I personally just don't understand Bitcoin and retirement accounts, right? Again, with all of the cool things that you can do out there, again, being able to trade, 24/7, 365. Some folks think that's bad. I think it's good. I think the ability to, again, wash, sell, rule, all these really cool nuances. And then again, it's a bearer asset. The ability to hold it and do other things with it, to me, I think is very interesting. And then also, outside of that account now, right? If I have a large gain in Bitcoin and I want to borrow against it to be able to, whatever it is, I want to pay down student loans, buy a house, whatever the case may be, you just lose a little bit of that inside of, a lot of it actually, inside of a retirement account. So I disagree with it, but for the other reasons that other folks disagreed with it, right? I think it's great there's access. I think folks should have that. I don't think it's anything out of the norm for Fidelity. They've been in the space for a while. They've, Abby Johnson is clearly all in here, right? And she recently said they're going to double down. They want to make sure they're going to provide the education and everything else. And then the other part of that is, it's one thing for them to say that, but as you know, and I know, the plan providers have to be on board, right? And if they're not, they're just not going to take on that responsibility for, just to give clients access. And then they want more regulatory clarity, which I think is great. But I don't think I'm a proponent of Bitcoin and retirement accounts right now.
All right. So as a fintech executive, let's step back for a second and talk about the fintech marketplace, if that's all right with you. You had posted something about AdvicePay recently. I'm a client of theirs. I use it for credit card billing. You said that you felt that they'd enhanced their offering since you last used them. What do you see?
So when I used it back in late 2017, 2018, I was simply using it to get paid for my clients who owned a lot of crypto away from me that I couldn't bill on, obviously. And I just needed to get paid for my advice. So did a demo yesterday because I will probably be using it for the RIA that I'm starting. And I was intrigued by a lot of different things. There's the customization now I thought was awesome, right? There was a lot there that I was just like, oh man, right? So the main thing for me, right, was the ability to provide that end client experience that is going to be super easy, right? So to be able to customize how they actually pay, what they actually see. I thought all of that was really neat. And then you see the digital wallets option. I'm like, oh, that's cool, right? Because now Apple Pay is a thing now. It wasn't before. Google Pay, that is nice. So now once you start getting into digital wallets, right? DM Kitsies and Allen and say, hey, how about some stablecoin payments, right? So I kind of put that in my tweet. But I really like the real, just the platform built out to show your accounts and, all of the functionality and the customization I think was awesome before, the invoice, to be able to put, all of your logos and then have it talk to Wealthbox. And it was really, really nice to see. So we're excited. Got some big things coming on the RIA front. So we're building a really slick, unique tech stack here that I think folks are going to wig out about when we make the announcement on the RIA. So I'm excited.
Yeah, I'm a big fan of their deliverable. It's priced right. It's a great deliverable. And Bill Winterberg recently joined the firm. They're gonna do big things.
Yeah.
So you mentioned you're building out a tech stack. Tell me what are some of the tech vendors today that you think advisors need to put eyes on that maybe they haven't in the past? So forget about the big brand names.
Oh, I wanted. It's funny. I want to give it away, but I don't right now because we're working to get everything straight in the background. But there's two names that we're going to use specifically that I think advisors should know. And if I said their names right now, they wouldn't ring a bell.
Definitely.
But there's more though. So to that end, I think there's a couple things that come to mind. One, Smart KX, Lacey Shrum's company. What she's doing to make sure advisors are compliant with their billing. Again, we were just talking about quarterly in advance and quarterly in arrears. She has a background as a regulator. Like, she's super sharp. So Smart KX, I think advisors should absolutely give a look. What else?
I feel like I put you in a spot because I said don't name any of the big brands that we're all friends with, and then
yeah,
and you're trying to keep this under wraps. So maybe next time you come on, we'll do a little deeper dive on the fintech space. Is that fair?
I have a bunch of names I want to give you now, but I can't. But yeah, that was a good question. I'm like, oh, do I do it or not? But when we launch though, like, we're going to give a full rundown of what we're using and why. And I think when we do, a lot of advisors are going to go, what in the world? Right. So we're excited about that. So yeah, we'll go through it for sure.
Awesome. All right, let's wrap with this question. And I want to give you a softball to close with. This will be a clip that we'll put out on social media. So the setup for this question is important. For financial advisors today who have not explored giving advice around cryptocurrencies, given this recent market correction? What do they need to do?
Right now, every advisor that has been peeking over the fence, if you will, needs to do three things. One, spend this time now to have conversations with clients. It's kind of, the barrier is low now. Just bring it up, right? You don't have to defend it. You don't have to try and just, hey, what do you think of crypto? Just have the I own some, or whatever the case may be. If you know clients have it already, give your opinion. Have an opinion, what next steps are. Hey, what are you learning? What are next steps? But I would encourage every advisor now just to dive in with the conversation. Forget about the portfolios. Forget about everything else, what is going on. Just have conversations with clients. What do you think about this, Mr. and Mrs. Client? Right? What do you feel like? Do you think there's some utility here? Or just really start to learn from them and then give your opinion, right? I always thought it was tulips. Right. And this is, so I would have the client conversation. Now's the perfect time to do it. There's no barrier where it's kind of like, oh my God, it's difficult. Just everyone's talking about it. So have that conversation. Second thing is, I would right now look at where some of the best resources are for education, right? Crypto assets. I continue to recommend that book. Yourself, what you're doing. Coin Metrics, which is they have a great podcast on the brink, but great newsletter. Projects like Goldfinch has another awesome newsletter. And then also look into, there's three of them, right? Rick Edelman's DAC FP, phenomenal. Interaxis, their CDA program, and NASDAQ's Advisor Academy, all great resources to go and get educated and kind of start there. And I think the last thing, which is, we've been saying this for a while, but open a Cash App account and just buy $25, right? Like just try it, right? Just to experience it and just to see what all the fuss is about. And I think once you do that, you'll be able to, especially for advisors, you'll go, is this easy for people to open a damn account here and start trading? And then you'll go, oh crap, all right, I got to get in front of this for my clients now, because they'll blow themselves up. So I think when you actually start to experience it yourself and see how easy it is, that easiness is not always a positive. As you know, there's some negative drawbacks to that. If advisors experience that firsthand, I think it'll be easy for them to add value to clients.
Tyrone, I'm grateful for you coming on and educating us again, sharing your knowledge. I got to tell you, I've stole this line from you for the past 2.5 years, but I always give you credit. You got to educate before you allocate, according 100%. To Tyrone Ross. So, thanks for coming on.
I appreciate you having me, man. Love and light to everybody. No kid hungry. Go feed a hungry child. I appreciate you.